like lose a lot of money. So I was like, damn. So I like stopped trading for like a while. So that's just how it was for a while. Like I blew like my account like last year, like I want to say like October, November. Then I didn't trade till like um I think summer this year, like May, June. So at first I was trading was going okay. Then I fucked it up again. So then I was like, yeah, I just stopped trading for like a week or two. So now like I just want to just like do it like well because I know that I haven't been like going about it the right way, right?
Mhm.
So yeah, so okay, Euro US, like let me just like do this chart right now. Mm, okay,
Start on the 4 hour or the
4 hour.
daily. Yeah.
Okay, okay. So
What is this arrow right here?
oh yeah, this was like a while ago. It was like a setup that like I saw. Yeah, because it was like during the weekend. It was right here. So I was like, it was going to come back and test um this support before it goes back up. Like that was like my analysis on the pair. Like
Okay.
so that was like so the arrow here like at the time it was like right here on the. So I was like, okay, it was going to go back down and test this support and go back up since it was on an uptrend. So that was like an analysis on this like a while ago while I was.
Do you use any indicators?
Um, I use I use Fibonacci, um, just Fibs. Like, that's really like about it. I was trying to start using moving averages, but like I was just it wasn't just really. I didn't really like, it wasn't really helping me that much. So what I mostly trade like just price action. Then I use Fibs like for confirmations. That's like mostly what I do.
Mm-hmm.
I probably also using some indicators. So
Okay. So what's your bias on EU right now?
EU, okay. Um, EU is on a downtrend. So what I think about EU is that like it's gonna since it's on a downtrend, it's it's like reversing. It's gonna like go back down. So now let me try. Let me use the field. Hold up, my bad. Yeah, okay. What's this? Okay. So you take that down. Thank you. So what I like think about this is that he's on a downtrend on the 4 hour chart. So I feel like he just retraced a little bit to the 0.382 and it's gonna go back down. So if I was like that's like what I think about this pair. So let's say I was to take this trade, I was probably gonna set like take profit around 1.11943.
Okay, but check this out.
Uh-huh.
So here, I want you to do something for me. I want you to pull out the RSI indicator for me. So go
RSI,
here.
okay. Mm,
I'm going to teach you something right now.
okay. This right.
Yeah. Okay.
Okay.
So now there's something called, divergence.
Yeah, I've heard of that, but I haven't really like looked deeply
Price
into it.
makes a lower low,
Uh-huh.
but RSI makes a higher high. That is letting you know that this downtrend is slowing down and losing momentum, and there is going to be a shift of momentum. Okay. You see how there was divergence here? Price
Okay.
makes lower low, RSI makes higher high. The
Oh, okay.
indicator and the price is not agreeing. They're disagreeing.
Yeah. Yeah, I see
So
that.
so this is a reversal. This is reversing. So because we know that RSI is showing divergence, there's a shift of momentum. So this downtrend is coming to an end and price is reversing to an uptrend. So I actually am bullish on EU and I'm actually bullish on GU. I'm bullish on gold and I'm bearish on the dollar index. So stop sharing your screen. Let me show you my screen.
Okay. Okay. Yeah. And one other thing I wanted to say is like, so like I was watching like a video on YouTube about a guy, and he was like, you can hear me, right?
Yeah.
He was like, so he basically talking about the indicators that like we shouldn't be using. I don't know how accurate it was, but I was just like, he was talking about like indicators that like we need to stop using because I guess like it's like a lot of people use it and like banks have a way of like faking people out or some stuff like that. So he was talking about like racist RSIs. He was talking about like moving averages, like FIBS and all these things. But like for the part, I was like, it actually makes sense. But then I thought about it, I was like, okay, so he's just saying like we shouldn't use all these, and he was talking about like some other like indicators that I was like I never heard of before. That's like one of the reasons. So I was like confused, like okay, so do I keep using these indicators or do I like stop? So it's like
I got you.
kind of like messed me up too because I just saw it on YouTube. I was like, damn, like that's crazy.
I got you. Hey, 1 sec. I got to get my charger. 1 sec.
All right, no problem.
Okay, are you there?
Yeah, I'm here.
All right. So the indicators that I like to use in the strategy that I'll be teaching you, which is the market makers method, is the RSI and the moving averages. I use 5 different ones: the 5, 13, 50, 200, and 800. And so I use the moving averages as confirmation. So like one of my confirmations is like whenever price is in the uptrend and we're looking for the reversal for the downtrend, I'll wait on the 5 and 13 EMA cross and the candles to close underneath it. So my entry would have been here. 513 cross, candles close underneath it, and then we got a good sell. Then here, 513 cross, candles close above, look for the buy, boom. 513 cross here, look for the sell. 513 cross, look for the buy. And you see how I'm trading these key reversal patterns?
Yeah.
And you see how right now we got another one. So I'm looking for price to go up, last wave up. And this is really just like Elliott wave, if you really think about it. Because we have a one big push up, correction, push up, correction, push up, because we know price is in an uptrend, right? Because price is making a series of higher highs and higher lows, right?
Yeah.
Yeah. So we should be looking for buys.
Okay.
Also, keep in mind that like price moves in series of threes. So like with Elliott wave, you have like 1, 2, 2, 3, pull back, 2, and then it goes up again. 1, 2, 3. Pull back.
Good evening.
1, 2, 3, 4, 5. 1, 2. Right? Goes up 3, down 2, up 3, down 2, up 3, down 2. Right?
Okay.
And you can see here 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5.
1, 2, 3, 4, 5. Okay.
So there is a module in my course.
Mm-hmm.
I'll give you access to this too. Elliott Wave.
Mm-hmm.
I go over support and resistance, trend lines, break and retest, channel trading, Fibonacci, Elliott Wave, key trading patterns, top-down analysis. So go through this stuff. This is all good. I'm sure you probably already know it, but like it's one thing to like understand support and resistance, but it's
Yeah.
another thing in trend lines, but it's another thing to actually go back into the charts and apply what you know, right? So like for
Yes.
example, in the trend lines module, I talk about identifying trend lines, right? Because this is an uptrend.
Yeah.
So you can use this trend line to see that price is holding as, or the trend line is holding as support and price is bouncing off of it.
Yeah.
And I have a section on break and retest where price will break and retest either through a support and resistance zone or through a trend line. So your entry would have been here. So without using any indicators and only using price action, I can see that price is in this uptrend and price broke through this trend line and retested it. So I know that my entry would have been here, break and retest.
Breaking news. Yes. Okay.
Break and retest. And then there's the support zone right here that price broke through as well. Break, retest.
Okay.
So there was two possible entries on this trade. You could have did it off the break and retest of the trend line, or you could have done it off of the break and retest of the support zone.
Oh yeah. Okay.
So what I do is when I'm trading, I combine the market makers method, and then I also combine retail trading together in regular technicals, and with that, it's very powerful. With the market makers method strategy, I don't have any modules in here yet, but I will add them to it. But like basically with my mentorship and what I've been doing and teaching people, I've been teaching people personally that method. That method just based off of like my mentorship and like the curriculum, how I want to teach it. But basically, this we know that we are trading against the banks, right? Like that
Yeah.
there's big financial institutions, J.P. Morgan, Chase, Citi, Goldman Sachs. There's all these big financial institutions that are taking part in trading, and they are the ones that are providing the liquidity for us to trade. So when we're trading and they're trading, they make their money off of pretty much us losing because we're trading and they're trading. So we know that with trading in general, there has to be someone buying and there has to be someone selling. So
Yeah.
going back to Euro USD,
Mm-hmm.
you said that you would have sold here and you would have took profit down here. Well,
Yeah.
if you would have sold here, there's people buying here at the same time,
Yeah.
right? Because
Yeah.
there has to be two people. There has to be two people on or I guess one person on each side. If there's someone buying, there's someone selling. So with that being said, if the banks are taking a position, if the banks are long, okay, there
Mm-hmm.
needs to be someone going short. And the
Oh,
banks,
okay.
they have the power to move the market at their own will.
Okay.
They can move the market in whichever direction they want because the volume and the amount that they're trading is very big. So they
Yeah.
can move the market at will. So if the banks are long, they can engineer price to make it look like price is going to drop. So that's when you talked about how the banks, they try and fake people out That's what
Yeah.
they're doing. They're making people to see something, inducing them to take a trade in whichever way that it looks like the price is going to go, but actually price goes the opposite way.
Yeah.
So like so like here, I bet you people saw price dropping here and people wanted to sell. Well, banks, they were already going long here, so they made it look like price was going to continue to drop just for them to reverse the price, because they needed enough people going short so that they could go long. If they
So
want to push the price up, there needs to be enough retail traders selling, taking sell positions in order for them to take that buy position and make the price go up. Does that make sense?
yeah, that makes sense. That makes sense.
It's called engineering liquidity. I probably did a bad job at explaining that, but essentially that's what that means. It's like
Yeah.
we're trading against the banks. If banks wants the price to go long, well, they have to induce a bunch of retail traders to go short, because they have to take the opposite position of the position that they have, and that's how they make their money.
Yeah. So like um so like the way the banks do it, don't you think the bank knows like the basic like indicators that we're gonna use, and like what can they just work against that? Okay, they know that you're gonna use this, and like you're probably gonna use like let me say like fibs or like something. So they're gonna
Yeah,
like
yeah.
hold
For
like
example, I'll show you an
yeah,
example. I'll
yeah,
show you a really good example. So, like for
yeah,
example, okay, we know with the uptrend and the downtrend, right?
yeah,
You know that we need price to make higher highs and higher lows, and we know that in the uptrend we don't buy the higher high, we buy the higher low. So if
yeah,
we see that price made this higher high, we don't want to get in right here. We want to get in right here.
yeah,
So we know impulse and correction. Impulse, we don't buy up here. We wait for the correction, right?
yeah,
So we wait for this move back down. Back down. Okay. And then boom. But here, okay,
yeah,
so like look at this example. So price pulled back, pulled back. Okay.
mm-hmm,
But look right here.
mm-hmm,
People people saw this correction, so they pulled out their fib. They saw that this was a 50% retracement, right?
yeah,
So like right when you see that, don't you think that you want price to go up to the negative 23.6 or the
yeah,
61.8?
yeah,
So you see that you enter here to go here or here.
yeah, yeah,
But instead, people bought right here, and then they held this level. They held this level. They held this level for 1, 2, 3 days. So people bought here, and they saw a little profit, right? 50 pips profit, okay? But then they dropped the market, held the level, and then dropped the market for like 5 days.
yeah,
So they held this level to induce people to go long, to take long positions, because people put out their fib and thought this was a 50% correction to go to the next wave up. But instead, they accumulated all the buy contracts. Once the
yeah,
market makers had enough buy contracts, they were already short, ready to go. So we trade the second leg of the M and enter on the 513 cross here. So this was your entry.
mm-hmm,
And then it pulled back to the 50, last step broken. Right? Break, pulled back, retest, drop. And this is your sell. 145
Okay.
pips.
Okay, so basically you were looking for whenever okay, we're just waiting for it to test the resistance again, basically.
Yeah.
After he broke the after he reversed, waiting for it to just test again. We'll get that's one, but like that's one way to look at it. But there are also other people that looked at it from the fib point of view, where we went to the 50 and we're expecting it to shoot back up, right?
Well, yeah, you shouldn't do that. You shouldn't do that because we know we're at the end of the cycle. We're at the end of the cycle, and I'm going to teach you how to know when you're at the end of the cycle. Because with forex and currency pairs, it's
Yeah,
cyclical, and what that means is there's always going to be a bullish cycle and there's always going to be a bearish cycle. And the market maker has a bull cycle and the market maker has a bear cycle. And within the cycle, there's certain patterns that you can see to help you identify where you are in the cycle.
okay.
And so that's one of the things that I'm going to go deep into in the course and in our mentorship and our one-on-ones, and then I'm going to help you identify that. Also,
Okay.
there's certain highs and lows of the day and the weeks that'll help when price is going to make a critical turning point, and you can just wait to trade during those points. Those are very key points, and
Yeah.
this strategy is really going to teach you patience, 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 patience. Waiting for the right setup, waiting for the right trade, waiting for your confirmations. Don't get into the trade too early. So you're going to learn about all this stuff.
Yeah.